Welcome all. Welcome to Financial Freedom. My name is Samir Bapat, and today we are going to understand different opportunities in stock market for each goal. We have different people, we have different requirements, we have different environments, and we have different risk appetites. Stock market is one place where you have solution for everything, and today we are going to discuss what are the solutions available, how to approach those solutions. Briefly, we'll be going in detail in subsequent sessions, and we will see how we can go about it and create wealth. Just to confirm, can I have yes from all of you who are here to learn and create wealth for themselves? Okay, great. So that I'm addressing the right audience here. Also, those who have come just like to see कि ठीक है देखते हैं क्या चल रहा है, what is going on, let's find out. So if you are here just to find out, most welcome. Type yes if you are here to just find out what is going on. Okay, great. We have people who have come to check it out as well. Okay, great. So let's begin. There is a very important proverb in stock market, or you can say in general in life, that keep your money busy. Whatever money you have earned, keep that money busy. Otherwise, it will keep you busy. You'll be busy in earning the money. So very, very valid. So stock market helps you in keeping your money busy. Now, stock market is an instrument to achieve our goals. It's an instrument, it's a way by which we can achieve our goals. In stock market, opportunities are available to earn from 4% per annum to 100% per annum, irrespective of market conditions. Whether the market goes up or market goes down, some instrument or the other is available, which once you understand, it will be able to give you anything between 4% to 100% returns annually. Now, this 4% to 100% are safe to highly leveraged instruments. Now, what I have done today is, unlike my previous webinars, I have kept this webinar as very interactive webinar. Previously, I used to keep one topic and I will keep discussing point by point by point. Now, here I want to interact with the participants. The objective is, together we will make a list of our expectations from the market. Then, for example, what type of wealth creation you want from stock market? Because we have different people from different age group, different lifestyles, different background. So what type of wealth creation are you looking from stock market? So I would be asking you what type of wealth creation you want from stock market, whether you want a short term, long term wealth creation, monthly income. You can give in your suggestions. We will list down those suggestions, or what income or wealth required, in which form it is required. What is your risk profile, whether you want a low risk uh, instruments, to you want to know about low risk sorry, you would like to know about the low risk returns instruments, how much time you are willing to put, how much efforts you are willing to put. All that you can give me some suggestions, and then let's list down, and then we'll categorize, and then I will be taking you through the instruments what are available to achieve that. Then I will be sharing with you information how to go about learning those instruments and how to use those instruments, right? Okay, everyone good with this pattern today? I have changed the pattern today. Before you write your suggestions, I know few requirements have come. So are we good with this pattern for today? We interact, we understand what is the requirement of the participants, and then we go ahead and uh, see how we can do. Okay, so what I have done is, so type slowly one by one. A few requirements have come. Okay, so we want, the first requirement is monthly income, right? Okay. Okay, and we have low risk as well. risk. So I'll write low risk. Okay, then we have medium risk. Okay, let's categorize it as monthly income, low risk, high risk, long term. Okay, high risk, long term. Then we have finally free what do you mean, Ashwari? Finally free means long term, medium risk. Okay, let me long term risk. Okay, financial. Okay, financial free. Okay, wealth creation with low risk. Okay, low risk. When you are saying low risk, uh, also please mention what is the, okay, then constant income. Okay, now, okay, trade for living. Okay, any other requirement? You have some perception. Okay, would like to know. I'll just go through it. Whatever we have written so far, whatever has come up in the chat. So one is predominantly which has come is monthly income. One thing which we would like to know is about how to get monthly income from stock market. Is it possible to get monthly income? Second is high risk long term. So which are the instruments where we should be focusing about on the high risk long term, medium risk, okay, low risk instruments, okay, constant income, okay, deploy retirement corpus to partially grow and give monthly income for the expenses. Okay, so monthly income after retirement. Okay, so 5% for my time more than fixed deposit rate. Okay, 5%, very, very specific, very good answer. A question, sorry. 5%, oh, sorry. 5% plus returns more than FD. Okay, fantastic questions. Okay, anything else, or should we go ahead and great. Okay, fantastic. So now what I would going to do is I will trade for living and monthly income after retirement. I'll keep it here. And can I put it here? Okay. High risk long term medium risk, low risk instruments, monthly income after retirement, and 5% return. Can I have a confirmation from all of you if you can go ahead and discuss about these points? Yes? Okay. Now, what I will do is I will pick up three of the top point, because that will be valid for us to understand what do we need to learn or to understand to reach to this level where we have monthly income or a constant income or a trading for living. So I'm copying it and I'm pasting it here. Okay. Now, to achieve this, now the second question is, or the first question is, what are the instruments which we are required to achieve this? Now, the instruments which are required, if we are talking, my assumption is that our resources are less. Let's say we would like to get around 8 to 10% monthly income, 8 to 10% returns from our per month return. I'm saying my Assumption is those who are looking at monthly income, constant income, or trade for living. Let's assume that they have a corpus and they are looking at something close to 8 to 10% returns per month from the trade they do average on an average, because it is not exactly possible to get it in a month, but let's say within 2 to 3 months they get 30% returns on their investment, so that they have a sort of monthly income. Is my assumption correct in this regard, that they are looking for something like 8% or 10% or more percentage returns per month on the instrument? Yes, that will be do. Okay. When we are looking for such instruments, we, of course, the expectation is that we have to put some screen time. We do have to do analysis. Of course, we don't have to sit in front of it. It is much better than the office work, because you have to just increase the capital once you are there, and your income increases as you become proficient. How to achieve this? What instrument is to achieve this? To achieve this low income, you will have to learn derivatives, okay, which is futures and options. This is the derivative. This is the, like, we can say, the leverage instrument, which is highly leveraged and highly interesting. And this is the instrument which will be able to give you a constant income. You will have to learn how to use this instrument. Now, a word of caution: these are leverage instruments, so you should be knowing how to use them. Again, these are the instruments. What you need to learn to use this instrument, you need to learn technical analysis. Analysis and predictive techniques. That means you will have to learn to predict. You will have to become an astrologer in the stock. I'm saying, honestly saying, it's not a joke. You have to predict, okay, what is the likelihood of happening in coming time. So you have to become an astrologer in stock market about the price action, what is likely to happen. And based on that, you take, there are lots of techniques there are. So you will have to, when I'm saying you have to learn technical analysis, means you have to learn about price action, you have to learn about candlestick patterns, you have to see the basic patterns, which we'll be covering in next 1 or 2 months. We will be covering a lot of interesting things in that. So price action, how the price is moving, triangles, indicators, few indicators you need to understand. So that all comes under the technical analysis. To earn monthly consistent income, you don't have to learn or analyze the companies. You need not have to do the fundamental analysis. So that is the advantage of learning about derivatives, future and options. So do we have any questions on this 3 point? Like, what is the expectation and what is the instrument? You can type in your question if you have to know, so that otherwise we'll go to the next set of questions. Okay, so let's bring in the next set of questions. What we have, let me delete this so that, okay, so next set of questions what we had was high risk, long term, medium risk. So let's categorize into high risk, long term, and long term medium risk. Okay, and let's say high risk, long term, medium risk, long term, low risk. Now, to achieve this is typically for wealth creation. What we are trying to do here is for the wealth creation. Why it's not going? Okay, I don't know why it's. Okay, no, it has not gone. Just hold on. Just be with me for a minute. Okay. Now, if we want to achieve this, all three are possible by investing in stocks. So, instrument is, why this is happening. Okay, I'll type, please tolerate this. Instruments is shares. Investment in cash market, that is shares of fundamentally good company. Now, for high risk long term, you have to learn and focus on small cap companies. On long term, medium risk will be mid cap company, and long term low risk is large cap or hybrid mixture of debt funds and equities. So, if you want to generate wealth, see, highly small cap companies, again, it will give you return anything between 20% or so. Mid cap is always in the range 20 to 30% returns. Annualized, it gives. Of course, it will not give every year. On an average, over the period of 4 to 5 years, it definitely gives. Mid cap companies also give around 20%, and large cap will give anything more than 15% or so. So, if you want to generate wealth in high risk long term or long term medium risk, the instrument is we have to invest in shares. Now, the objective is, now the question which comes is, should we invest in mutual fund or we should go and invest directly on our own studies? My experience is, if you want to be successful in mutual fund, any idea how many mutual funds are there in the market as of now? Can anyone type the figure? How many mutual funds are there in the stock market, which are for like where you can invest? Anyone? Any rough guess? Okay, so we have to not crores. It's not. I'm not asking AMU. Around 4 to 5 thousand mutual funds itself are there. Some are large cap, small cap, this cap, debt, liquid, like all type of mutual funds are there. And there are only 4,000 companies in India where all this, let's say, even if not 4,000 mutual funds, at least there are thousands of mutual funds which are going to invest in the companies, and the total number of companies in India which are listed is 4,000. So they cannot go outside this 4,000 companies. In my opinion, it is easy to analyze a company than to analyze a mutual fund where to invest. In case you are falling short of time, still I would recommend to learn about the shares, how to identify good companies by learning fundamental analysis and technical analysis. Fundamental analysis, you may not be from commerce background, you may not be from like economics background, still it's not a rocket science that you cannot understand it. It's only about the profit loss, basic things which we see around us. So it's not that it's very difficult to understand all those things. Fundamental analysis is a general knowledge about profit loss and everything for a common man, as well as what the company does, how it is going to perform. And I have seen in my webinars, people with no economics background or no commerce background are able to analyze fantastically as well. I'm not saying commerce background will not be able to analyze, but others are also able to analyze fantastically. So Along with fundamental analysis, you have to understand technical analysis so that you will be able to take advantage of this, even if you are putting SIP in mutual fund. So people I have seen, they suffer when they invest in mutual fund, because they have not understood the fundamental and technical analysis. So this is one part which you have to understand. Then let's come down to the third requirement what we had today. The third requirement is low risk instruments, monthly income after retirement, and 5% return. So these are the three instruments or the three requirements which has come up. Now, for this we have instruments which are available are mutual funds, which are liquid funds. These are safe funds. Now I'm talking something about very safe. Like we don't want to lose the capital. We don't want to lose the principal, whatever is invested. We are okay with less returns, but for us, the principal is very, very important. So where should we investing to protect the principal? And we definitely need returns better than FD. So we have liquid funds, debt funds. So liquid funds will give anything maybe 0.5% more than FD. Debt funds will give debt funds will give anything between 4 to 8%. Then if you want any, I want 8%, but it has to be very, very safe, then you can go to gilt funds. Gilt funds are those funds who invest in government bonds and instruments. So they invest in government bonds, tools. The bonds invest issued by the Indian government. So they are very safe unless until government only says I don't have any money, which has happened in Sri Lanka, Pakistan, and like that. But it is very unlikely that it will happen in India or whichever country bonds you are taking. So gilt funds is the safest. And believe me, if government says I don't have money, the stock market and everything will collapse. So this is the safest. As long as the gilt funds are giving you returns, this is safest. Gilt funds you can get anything between 8 to 12%, depending on which bonds they are holding and what is the time to maturity. Then we have gold funds, gold ETF. It is as good as safe as gold, because it's funds. It's a gold in the paper form. You don't have to have a locker. You need not have a you need not worry or have a sleepless night. The gold ETF, it's a like it's just like share. It is uh, the fund is having gold, equivalent gold somewhere kept in a safe place. So these are the gold ETFs. So if you are willing to uh, invest where the returns you want equivalent to gold, as the gold appreciates, your asset value will appreciate in the gold ETF. This is normally goes with the gold ETF. As per the stats available with me, gold sometimes it will go up 30%, but if you see over long horizon, gold ETF also you should expect anything between 8% returns over the year. So these are the instruments which are available for safe returns, low risk, monthly income after retirement. These are available. So till now, based on all the questions and all the requirements from participants, we have covered monthly income, high risk, long term, and low income. Anyone has anything other than this they would like to know? Okay, how to go about it? Anything, any questions apart from this? So, or any other requirement? Okay. How many of you learned something new today? Can I have yes from all those who, all the people who have learned something new? Can I have yes from all of you who have learned something new, got some direction. Okay, great. Thank you. Now, what next? Before I open the forum for question hour session and uh, this thing, so there is one question: what's next? Based on my experience of past 14, maybe 15 plus years in stock market, I understand that there are some topics, very very important topics, around 20, 30 topics which are very very important for anyone who is going into stock market to understand, learn, and then he can say yes, I will be confident in earning in stock market, whether it is way of, whether you are investing in mutual funds, or you are investing on your own, or you are giving it to someone else, whatever you want to do, right? It's not only about earning yourself. If you are giving it to someone, you should be confident that what he is doing is correct or not. Or even if you are giving in mutual fund, you should be confident what mutual fund is doing is correct or not. Unless until you are confident, you are not, unless until you are not confident, you will not be able to earn even giving money to someone else, and you will be dissatisfied. That is my experience. That is point number one. Point number two is, I have identified some 30 topics which everyone should know, and that is also part of my mission 10 million to explain. So, every Tuesday going forward from here, I'll be taking all those 20 to 30 topics every Tuesday, and I'll be sharing with you people so that you can understand whatever I have mentioned here, how you can achieve. Gradually, we'll be covering in form of one topic or the other, so that you have a solid foundation for earning in stock market. So that is how the program is designed. Those who want to go to the next level, they, I have other programs also that we'll be discussing in the later date. Okay. So we have Alok Kulkarni. Please tell us about Nifty 50 or index funds. Index funds are typically, they will have the shares in proportion of index. Whatever is an index, whatever are the companies in the index, they will buy in the same ratio in the fund. So as the index will move, the performance of index fund will also happen. Historically, if you see year over year, if you are purely into index, the return is not more than 8 to 9%. Max to max, it will go to 10%. So it is better to avoid index funds. Typically, you can as well go and choose into large, small cap based on your. No, don't go into. I would not prefer going into index funds as a SIP. Then we have Lina saying, can we keep some good company funds for long term and sell them in future, or buying selling is necessary all the time? No, no, we can keep and for long term. You can analyze the business. And Warren Buffett, the god of investment, we can say, long term investment, he buys never to sell. So he buys the company by after analysis, fundamental analysis, and keeps for a longer term. So we have one more info in FNO. I'll be publishing the entire schedule shortly, and so that you'll know which topics are being covered in that. Okay. Any other questions we have for today? Okay. Okay, great. So I hope everyone enjoyed today. Everyone enjoyed the session, gained some knowledge. Going forward, every Tuesday we will have some important topic which will enable you to earn in stock market. I'll be taking it's free for everyone, and everyone is welcome to join that. And also, I'll be sharing some trading ideas where you can see and learn it for learning purpose only, and the recording will be available on the YouTube. So thank you so much. Thanks a lot. Thank you everyone for taking out your precious time and joining the session today. Thank you. See you on coming Tuesday. Thanks a lot.